Nitin Raheja joins us on the show right now. Nitin, hi, good to be speaking with you. Well, the FMCG numbers, that's what I want to begin discussing with you because Nestle, Tata Consumer, even HUL and Avenue Supermarts, they were all weak. Maybe it's just barring, GCPL which managed to stand out. But do you expect this pressure on earnings to continue for these FMCG majors for a few more quarters?
So, if you look at these FMCG majors for the last few years, there has been a couple of engines which are firing and a couple of them which don't fire. So, if in the past, post-COVID, we saw this whole, urban spending, drive growth and rural lagging. Now we are seeing rural starting to show green shoots and signs of revival, but urban is suddenly lagging and so on and so forth. So, I think some engine or the other has been sort of holding it back. And I think it's a pretty perplexing time as far as this business is concerned, because there are many challenges at play. The bottom K of the K-shaped recovery that we've talked about in the past is continues to struggle. It's just been the upper K which has done well. Then you have this whole threat happening from quick commerce, from online retailers, and so on and so forth. And so I think the business is facing many challenges, and I think the commentary that has come from the different players has indicated towards that. And I would sort of be a little cautious on this business. I think companies who have more of a rural orientation will probably do better than the rest. But it sort of makes you wonder in terms of the kind of multiples that they trade at. And so we are sort of generally overweight on that.
Right. Okay. So Nitin, wondering whether you're already ready with the shopping list or already started buying for Diwali. And I don't mean Diwali, I mean stocks for Diwali.
So, I think this is the kind of correction that we've seen. I think if you just look at the optics from the index perspective, they seem to represent the fact that the correction has hardly been to the tune of 6.5–7% if you take the Nifty 500 index and so on and so forth. But however, when you dig a little deeper and you look at what's happening within the index, it's been absolutely brutal. And I think the key element that stands out is that valuations, even today, given a slowing earnings cycle, do not throw out something in the face per se. In that sense, I think one has to be very, very selective and sort of pick stocks purely on the basis of the fact where valuations are not very, very euphoric, and where earnings growth is very sort of visible. So I think there are some pockets out there which are starting to look very interesting, where one needs to have some patience while investing. Like, for example, autos has seen quite a bit of correction. And I think it is a cyclical business and it currently going through a cyclical downturn. But I think the longer runway is very good. And I think some of them are starting to look very interesting at these kind of valuations. Among the banks, I think a lot of what could happen is starting to happen in the form of credit cycle, turning down, is slowed down. And even the stress on the books in the case of unsecured is starting to show up. However, I think the valuations are more or less built into this, and so one can look at the banks, especially those which have sort of corrected aggressively, where the valuations have really come down to very attractive levels, and position yourselves going ahead.
Watch out for some of those banking names where the valuations have become very, very attractive at this point of time. But Kunal, what would you say to a Poonawalla FinCorp? It's down 19% as we speak, and HPCL, a very weak set of numbers posted by the company. It does look like there's going to be a bit of an inventory loss there, but 8% lower on HPCL, and of course this stock has done very well. So on HPCL and Poonawalla, what is the recommendation?
So of course not to buy these stocks at current levels, because I think we are going through that phase of the market where the reaction more on the down is to negative results is much more on the downside than what it is for stocks which are delivering positive results, or where the results are above expectations for the markets. So Poonawalla Fincorp, the stock breaking below a major support which was at 350.45 levels, and then now today I think it's broken past even the sub the 300 level so far, which means that we could be looking at the stock getting into a corrective phase from here on further. HPCL could be an interesting bit, because the stock over the last 3-4 days was getting relatively shielded to the overall market correction. But after today's fall of 8% for HPCL, it's managed to break below a very crucial support around 385 mark. So I think if the stock is unable to recover back again about the 385 levels, we could be looking at the stock reversing at least over the very short term, and then potentially a fall closer to even 350, 340 levels.
Okay, Poonawalla Fincorp just reported its numbers, so I just wanted to kind of talk a bit more about that. The asset under management has gone up by 40% year on year, but I think on the P&L basis there seems to be a bit of a problem, because that is where something the pressure is coming in from. The net interest income is doing fine at 645 crore. But the pre-operating provisioning profit is actually 279 crore. And if I have it right, perhaps the company has reported a bit of a loss this quarter. Just give me a moment and get the clarity on that one, because that stock is tanking away as we speak. I'm looking at the consolidated financials, and yes, it is a loss at the bottom line which the company has actually reported, and that's the reason you are seeing that stock tanking away in the trading session. I don't see an exceptional item. The revenue from operations is fine. It is, I think, the other expenses are a little on the higher side, but there's definite weakness when it comes to the earnings, because it's a loss that the company has posted last quarter. The number was 291 crore in terms of the profitability. It's turned to a loss of 471 crore on on a year-on-year basis, or actually quarter-on-quarter basis. And the tax expenses have, I think, something which is actually a positive. So tax credit has come by, but it's just the expenses being higher than the income. That's the pure number, and that's the reason Poonawalla Fincorp Aisha is down in the trading session.
Oh yeah, absolutely, quite a crash on that one. And I think that's the nature of the market right now, right, Nitin? That stocks which have been overvalued have been given great returns, very high HNI concentrated names. Case in point being Poonawalla itself. And just one quarter of bad numbers and the stock gets thrashed out immediately.
No, absolutely. But when you drive valuations and give the benefit of doubt very often to managements, and re-rate the business to levels which are unsustainable, even the slightest disappointment, which might be short-term in nature, will very often trigger this kind of violent reactions. So it's not surprising. It's not the first time we've seen this happen, and we'll probably see a lot more of them. But clearly, I think the bigger point is that if you look at the market from a mood and a sentiment perspective, there is clearly a short-term change that we are seeing, and almost every time, right? What I have seen in my 34 years of being in these markets is that whenever valuations reach unsustainable levels, some event acts as the trigger, and then there is a post-mortem which tries to put together the story around it. I think valuations, especially in the mid and small cap space, had become unsustainable in pockets like PSUs or defense, and I think were ripe for a correction. We are seeing that. In fact, if you see the larger Nifty 50 has fallen far less than all the other indices, that's because it never really saw that kind of euphoria.
Interesting. Okay, let's pause for a bit and let's get you an ET Now exclusive. And sources are telling your channel that the center might be looking to expedite the land asset monetization for some of the PSUs. Let me take it across to Prakash and get in more details on the same. Prakash?
Yes, an important development coming in, as we are learning from our sources that the government will expedite the monetization of land asset for central public sector enterprises. A very significant development coming in. We are given to understand that the government is now preparing a new strategy to fast track monetization of land assets for CPSEs. In fact, Finance Ministry will strengthen the National Land Monetization Corporation, that is NLMC. The NLMC will be tasked with the time-bound monetization of land assets, and the Department of Public Enterprises will accelerate the appointment of a staff and provide other infrastructure support. In fact, the Department of Public Enterprises has already instructed all CPSEs to identify land assets that are not in use. In fact, some of the CPSEs have already submitted their list of land assets. Along with that, the monetization of land assets for BSNL, MTNL, BEML, Hindustan Cables Limited, and the Cement Corporation will be put on fast track. As you were aware, that the NLMC was approved by the Union Cabinet in March 2022 with an initial authorized share capital of rupees 5,000 crore. Now, government is planning to strengthen NLMC in order to fast track the monetization of land assets for CPSEs.
Okay, an interesting story there. We'll watch out for that, Prakash. Thanks so much for bringing us those exclusive details. Just taking stock of what else is happening in the market, because the earnings for some of the companies seem to be out. It's BPCL. For now, the numbers from HPCL didn't look very impressive. Let's take a look at what BPCL is showing up in terms of the earnings. The stock, of course, has taken a bit of a knock, but very initial numbers that will be coming in, and we'll watch out for that, because overall it's a lot more to do with the internals, because profitability usually has a lot of one-offs, but for now what it's worth, it's lower than expectation by 1,000 crores thereabouts. So we'll wait by for more details on this one. In fact, the oil marketing companies and the entire energy space, what's your view on that, as far as the overall setup is concerned, Naresh?
So technically, if you look at it, the stocks have corrected quite a lot. And the more important part is, if you look at crude, it took a knock in the last couple of months, and it is still around that 75 mark. So eventually the correlation should play out. So at current levels, it would be a risk reward buy. The stocks are back to the bases where it started from, good 15-20% down from the top. So still look interesting as such.
View coming in. Nitin, what about you, the oil and gas space?
So, I'm not a great fan of any of these businesses, which have a very heavy government hand, deciding in terms of their pricing mechanisms. Although supposedly it's not so, but we've seen that happen in the past. And plus, with crude going through this up and down cycle, that every time it comes off, there is some geopolitical tension which brings it back up, and so it's actually been trading in a range for some time now. So these are more tactical trading bets, if I were to say, but not something which has created wealth on a fundamental basis over long periods of time.
Okay, that's the take coming in right now on some of the OMCs and how we're looking at the construct of the oil and gas space. Just want to, mark where the markets are headed, where we've scaled up actually. We're back at the 24,200 mark for the Nifty future. So some saving grace. You can see that little bit of a, perk up coming in, if you will. ITC, of course, is up 2.5%. TCS is breaking back into the green. ICICI Bank has actually seen a recovery. So has Kotak Bank. There's BEL, of course, which has been kind of a strong show, and it's closing in at the high point of the day, even though it's less than 1% higher. Britannia, Unilever, these are some of the names. And of course, Axis has been a strong one that also is holding out well right now. Kunal, an attempt of a recovery at least for the Nifty banking pack, but does it look like it's sustainable?
So I think it's a recovery, but it's more of short covering so far, because looking at the data, 24,000 call, for example, put had a lot of writers for itself. So I think the moment we near towards the 24,000 mark, 2460, 70 was the low the spot Nifty made. I think from there on we saw the index getting into a recovery. Same was the case with Bank Nifty, 50,500. Again, a round strike is where we've seen some heavy amount of put writing. So I think it's more to do with put writers trying to just about safeguard this strong psychological mark. So which means what we could be looking out for is that over the next 2 or 3 days, the index should stabilize, both of the indices. So 24,000 as well as 50,500 for the Nifty and the Bank Nifty, I think should act as a very minor kind of a support for the very near term. But what we should be looking out for is the point which I made earlier, that if large cap stocks manage to form a bottom, and if there's a credible recovery into these large cap names, that's where I think we could probably get a lot more confidence. So as of now, I think the eyes should be that in the index on the very short term could probably have formed a minor support levels at 24,500. But the names like Reliance, HDFC Bank, L&T, these are the kind of stocks which can probably push the index up higher. Add to the fact and ICICI Bank, then I think we could probably be getting into a stronger recovery.
Okay, point taken. Those are some of the stocks. Nitin, on that note, we'll let you go. Thanks so much for making time and speaking with us today. Well, a lot of earnings which are expected to come by today as well as tomorrow. ICICI Bank, for instance, is tomorrow, but today we might be expecting numbers from Shriram Finance anytime soon. First, let me take it across to Varun to understand what the street expectation is, and then we'll talk about ICICI Bank too.
Well, so we are expecting a stable set of numbers from Shriram Finance. If you look at the numbers, the NII is expected to grow by around 20%, the PPOP is expected to grow by around 16.6%, and the profit is expected to grow by around 18.5%, and it is expected to come around 2,074 crores. The loan growth, we are estimating around 18 to 20%. Now, this loan growth, basically, if you see, would be led by the overall good growth in the used CV segment. Other than this, if you look, the credit cost is expected to go up by around 15 to 20 basis points. Also, the cost of borrowing is expected to go up. Although the NIMs and overall asset quality, they are expected to remain stable. Other than this, if you look, the commentary of the management would be looked upon, especially on the two-wheeler loan portfolio and also on the personal loan portfolio, because these are some of the sectors or some of the segments which we are hearing have been under pressure in the recent past. So let's look out on the management commentary, but the overall results would be stable.
Well, ICICI Bank will also be posting its second quarter numbers over the weekend. So let me take it across to Gaurav, find out what he expects. And of course, then we'll bring in Somit to tell us what to expect from Indigo Aviation as well.
After the negative pressure that we have seen in the banking segment, when it comes to ICICI Bank, investors are expecting some kind of relief from this counter. And the reason why they're expecting is that when we talk about advances and deposits, they're expecting a healthy growth which could be higher than the peers. And that is the reason why we may see a little bit of uptick of around 4% on a sequential basis in terms of advances and deposits from ICICI Bank. And as a result, when we talk about net interest income, we may see a growth of around 9% on a YY basis. In unsecured segment, we may see bank slowing down their growth, and that is the reason why net interest margins are likely to go a little down but still remain range bound for ICICI Bank. When we talk about PPOP, which is pre-provisional operating profit, cost to income is likely to stay stable, and that is the reason why we may see 11% growth there. And when it comes to provisions, now investors are not expecting any kind of negative surprise from ICICI Bank's asset quality, and that is the reason why PAT may remain at a growth of around 6% on a year-on-year basis. Other than that, the bank has said that the preference for segment-wise ROE is going to be important, and that is the reason why any kind of commentary on ROE is going to be important. Any kind of commentary on asset quality trend, how it is moving, and specifically in the unsecured segment from ICICI Bank is going to be important thing to watch out for. And lastly, any kind of commentary on the growth is also going to be something that street will be looking out for. But specifically when it comes to numbers, they are not expecting any kind of negative surprise in terms of ICICI Bank.
Well, yes, Indigo is expected to report a loss in the second quarter, and that is because if you look at the ticket prices, they were not on the higher side. They were largely flat, and air traffic was also kind of muted the second quarter, because this is usually a lean period for airline companies. Now, apart from that, if you look at the fact that the company's EBITDA, that is expected to be down by nearly 25% on a YY basis. Last year, it was close to 2,800 crore rupees, and this quarter it is expected to be only 2,100 crore rupees. Apart from that, yields which measure the average fare per passenger per kilometer, that is expected to be higher by only 1.6% at around 4.51 rupees on a sequential basis. In fact, if you see, the numbers are expected to be lower. Now, Q2 is generally a weak quarter. In fact, the revenue growth for the company would be the slowest in the last 13 quarters, while the company will be reporting a loss for the first time in the last 7 quarters. Domestic passenger load factor, which is a measure of kind of capacity utilization for an airline company, that is also expected to be flat at around 83%. But the commentary from the conference call will be something important to track from Indigo, and the key things to track here would be what is the airfare trend and air traffic trend that the company is seeing so far in the third quarter, what is the benefits of lower fuel costs that they have managed to keep to themselves, and how much of this they have passed on to consumers. Apart from that, what is the risk of potential delays in the aircraft deliveries, what has been the impact of this bomb threats that the company has been getting so far. So all these things would be important to track. from Indigo earnings.
Okay, so that's something we'll watch out for. Indigo numbers expected anytime now. Time now to take the BTSC trades. Naresh, what's the buy today, sell tomorrow, or sell today, buy tomorrow, and thankfully tomorrow being Monday?
So looking at both buys more in terms of relative outperformers, one is a buy on Bharti Airtel holding on the 1660 marks, so stop loss at 1640, target price of 1700. Second is a buy on Reliance Industries, which is trying to form a bottom here, stop loss at 2630, target price of 2700.
And so that's the latest coming in as far as the BTSC trade is concerned from Naresh. What about you, Kunal?
So I'll go with the contraband Nestle. Believe that the stock should have formed at least a short-term bottom on the charts. Looking at the way the stock has stalled or the correction has stalled over the last 2 days for Nestle. So would look out for targets in the range of 2360. Stop loss could be kept at 2200. And second would be a buy on BEL, a very strong recovery, almost like a hammer formation on the daily charts for the stock in terms of candlestick. So would suggest a buy with a target of 278, stop loss at 264.
Okay, those were the recommendations coming in from our charters. On that note, Kunal, Naresh, we let you go. Hope you have a nice weekend. It's been a very turbulent week, very stressful one for traders and investors alike. Hopefully the weekend will give us a bit of a breather.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.